So, welcome everybody to the, what do we call this? The trading performance webinar with the intro of the MetaTrader 4 EA. How you doing, man? Okay, so what I'll do, I have to obviously share my screen here. That would help. Let me know if you see it just fine. You see it okay?
It's coming up right now. Okay, I can see it perfect.
Okay, cool. There we go. All right, so you can see my Word document here about trading history webinar.
Mm-hmm. Yes, correct.
Okay, awesome. So you always chime in whenever you want. If you've got a question or a comment, just go ahead and chime in. Okay.
This Office 360.
What's that?
The word is this Office 360?
Yeah, 365.
Oh, 365. Is it expensive or
100 bucks for the year.
for the whole year? Oh, wow.
Yeah. I was using LibreOffice for a while, and then they started putting malware in it, and I just said, you know what? I hate Microsoft, so here I am on Office, where I'll get a little better security, hopefully.
Okay.
Okay. So let's move on. So this whole presentation is about transparency and track record of trading gurus and the like. Because you were saying you're not a programmer, so you're my exact target market, just so you know.
No, actually, I am a programmer.
Oh, you are, okay.
I'm not a finance guy.
Oh, I see. Yeah. Well, we could talk about that afterwards. Okay, so I've been playing for a good couple of months on this daily transaction positions of profit and loss daily. Okay, so with crypto, obviously it never closes 24/7. How it works is it will measure from the previous day of midnight to the next day of midnight, which could be the current day. Everything's recorded in daily Eastern Standard Time, same as New York. I also include a position log, which is very important. The reason I put the position log, a lot of trading gurus won't do that, is because if I was to be called out on what my numbers are BS, the reason I put in the P&L log, or sorry, the position log, is that you can easily go on to Kraken or Oanda and measure the time of that asset or instrument that you're looking at and go back into time to see if that price was exact. So that's a solid, verifiable way to know that those numbers, those positions are not BS. Problem is, a lot of people won't do it and still say it's BS, but what can I do, right? So in here we measure, what I'm after right now is measuring win-loss ratio. I don't care about anything else about what the end of the day profit is. I'll talk about why and what I'm going to do about it. And if you looked at it, it's very low, and there's a reason for it, because I'm not using any leverage or margin at all is being used. It also includes the rate of change for each position taken. So if you have a position that gets a rate of change which is positive of 0.5% or a full percent for that position, that gets tracked.
I have a question.
Yeah, go ahead.
When you're doing your summary of profits,
yeah,
and I'm just looking at the losses right now, do you have something in the algo that says, or are you tracking how much are you losing? Basically, do you have an exit strategy? Like,
yeah, I do.
Like, how big are your losses if you're looking at a percentage? You say, like, when you add up, so you have a win-loss, which basically sums up, like, the wins and losses.
Yeah.
But then within those losses, how big of a percentage, or how much are you losing?
Yeah. So if you looked at my expert advisor, the MetaTrader one, I'll talk about in a minute.
Okay.
That has been coded up by somebody else, but that was coded up with an automatic stop loss of, I believe, if it drops below 10% of the entry price. Mm-hmm. So that's the stop loss to trigger it to get out. That's in Forex. So in crypto.
Are you also scaling in, or do you come in with like a sample size, or do you just go all in?
No, it just goes all in. Like I said, I'm going to be talking about it.
Sorry.
Okay. Yeah. No, it's okay. I want to talk about how it works right now, but I'm going to explain how I plan to, as you would call, scale in later on. Okay. So we talked about this. So one thing that's really important is, like what we were talking about earlier, is a lot of trading gurus are now going to be needing to step up and show this stuff, especially on a daily basis. And it can't be for last month or even last week. It has to be what was I trading last or up to yesterday midnight, because that's a standard I think people are entitled to know. But you got to step it up beyond that as well. So any trading guru that is worth anything would be able to easily put up not just their daily time, their log, their journal, but even do it somewhat real time. So if you're using Forex, you look at something like TrueFX or CoinCompare, because what happens is both those services will connect directly into your exchange account or your Forex broker account. And I think that is something that any person that's looking at this stuff to verify if they're good or not, to be able to get access to that right off out of the gate without having to question things and be able to have that listed publicly. Because if it's not out there, I think any trading guru that does not do that is just BS. And I'll bet you maybe not even 10 traders out there in the world do that. So that's important. So to answer what you're asking, Al, what's important to look for right now, what I do is obviously you got to demonstrate your track history. What you're looking for essentially is a decent positive trending equity curve. I'm going to show you what I've got over the last couple of days. And the real key is, let me just get rid of this. The real key is to ensure that every day, or try to, is that your trading days have at least a 50% win ratio. And I'm going to show you some examples of that, what I've had over the last 10 days, let's say. So one other thing you want to look for is a solid compounded annual growth rate. With me, my growth rate is not annual because I haven't shown the full annual growth rate, but the format I use is an exact term sheet that you would expect to get from a professional trader. So if you go to a bank, a hedge fund, any mutual fund, they'll give you the exact same format I'm going to show you as a term sheet, and it's the same format. But here's the thing, what a lot of people do, a lot of the, we'll call them bottom feeders out there that are looking for the lazy way to trade without putting the work in, you got to be expected to pay very, very high access fees. I've done the marketing, I've done the comparison with a multi-million-dollar plus, actually I'll say even getting into the billion-dollar account fund. You're going to have one, access of your account, of a liquid account. Also, if you're just looking for data and results, the real guys that are doing this, that have this kind of transparency, you could be paying in the excess of $500 a month or even $1,000 a month. A lot of people don't have access to that kind of capital, but yet they want all this transparency, all this third-party verification. If they're not willing to pay for it, then they won't get access to it, because once you show this, once you can prove it, you can now demand like top premium to be paid every month to get access to, if it's signals or if it's access to a chat room or any kind of service that is providing this, that's verifiable, and you're a top dog in the business. You will be expected to pay. That's the thing. So here's the other thing. Go ahead.
This is like your alert section from your side, because you have the True FX and CoinCompare,
Yep.
so you can prove that your track record is good.
Right, because as I said, in order to be on that, to have those accounts, those are directly in my trading account. Okay, for either in my case Forex or CoinCompare. With Kraken or Rwanda. So if I'm going to sign up and put TrueFX and CoinCompare on my site and give access to that anytime, anywhere, public, no questions asked, and it shows positive trading performance over a certain amount of weeks, months, or even years, yeah, you will be expected to be paying that kind of capital a month. And if you're not, go elsewhere and just go with Tim Sykes of the world and all that, Well, I could mention other ones, but I'm not gonna because they will take you to court if you slap.
Oh yeah, I actually I looked at him. That was I call them Lambo boys.
Yes, the frat boys.
Yes.
Yeah, I know. I see them all the time on Instagram and Facebook. They're a joke, and YouTube as well. But I'm going to talk about that, how to address it. So essentially,
So
go ahead.
so if you sell your service, I mean obviously there's a disclaimer, but and you okay, so basically you're saying that your algo is working, and you can prove that your algo is working, so then you can sell it for 500 or 1,000 a month,
Yeah,
right?
yeah, whatever the market bears.
Right.
And you got to remember, I'm not even going after institutional capital, but if with today's markets and how markets are not performing as they are, as they call them, distorted. Along comes a guy who's got all these kind of track records, but it's verifiable. Who do you think it's going to attract? It's going to attract either high net worth folks, pension funds, or any kind of institutional capital allocators.
Like a Piper Jaffray or
Anybody. It could be a bank. It could be even any of these high-end boutique bulge bracket type of brokers. Anybody.
right, or
Because,
even one of those guys, the prop traders too, because they can use it for alerts.
yeah, you could go after anybody. And believe me, when they see those results and they're verifiable, they'll come running. I've had a few years ago come running, and they're telling me they could throw $10-15 million a month your way. So why would then I be wanting to appeal to the small retail trader? Um,
Right.
you know what I mean?
Right, take the money and run.
More of that. You take more of the money times 100 times 1,000 and run. But it has to be verifiable, right? It can't be
Right.
BS. That's the key. So what
So
else? Go ahead.
so you okay? So it's verifiable. I had one. Sorry.
No worries. I'll continue. If you want,
Yeah, sorry.
jump in whenever you want. So
Okay.
essentially, once you get to this level, okay, um, it's not for newbies, right? Like I've got the tools out there, like the Python course you spoke of, that helps people, and it's a free language. It's open source,
Mm-hmm.
and I'll tell you as an example. People go, well, Python's this, Python's that. J.P. Morgan just wrote a new trading system that's equivalent to what Goldman Sachs had. It's a Python 2. It's called Athena. 35 million lines of code in it, and it runs all the back office, back end stuff in JP Morgan, all 100% in Python. So, Python is used in the institutions for a lot of things. So it's not like a toy language, you know what I mean? And as I said, we haven't even talked about machine learning yet and where the world of trading and algorithmic trading is going with machine learning.
Have you applied this to stocks?
To stock, no. There's a reason.
Okay.
There's a reason I don't like stock. And in the beginning, when I started out, I had a couple of guys that were really good, and they always told me in the world of stock trading, that's where if you make $100, you're going to be giving back $100 to the market, because stocks is like that. It's not like you can make a lot more money in a down market with commodity when you look at gold or silver, the performance of that. When you look at news, like last week where Saudi Arabia got attacked, their oil fields got attacked. I mean, it's these kind of trades that can make quite a bit. Forex is another one. I mean, especially when you could trade off the calendar of major economies and see how their currencies trade. And you can make a boatload in the world of options and futures as a professional trader. But I'm just no different than anybody else trading in the gutter, trading from nothing and going after the retail Forex. And I'm seeing somewhat promise a lot in the world of crypto. So this is what I was going to lead into, is about other trading gurus. I don't know if you know who I'm referring to, but he's very well known for taking people to court, which is not worth mentioning.
Cameron.
Oh no, he I think I know who you mean.
Ross Cameron.
Yeah, he's an okay guy. I don't think he's a problem. He's very
Warrior.
yeah. I've always liked Warrior. I think they're great. I'm going to be honest. I like what they're putting out. But there's somebody else offline. Once I stop the record, I'll mention them. But
Okay.
they
Yeah.
put up a video, I think in the last week. It's well produced. It's all slick in Thailand. And they go on about, you know, only look at traders that have regulatory listings, you know, that have been sanctioned by the SEC, and they're traders and they've been trading for 20 years and they got their name on the SEC or Bloomberg or whatever. That's fine and good, but here's the problem. They could still be scammers. A lot of these guys, like for example, in Ontario, we have the Ontario Securities Commission. I personally knew people that were getting fed insider trading when it came to ripping off literally not millions, but thousands of people's life savings. He scammed them, and the regulator here in Ontario just said, "Oh, don't do this again. Please don't do it again." He didn't lose his license. He didn't get debarred. I mean, you got to be basically like a what do you call them? Like the social, like social lowest of the low, like a kitty. You know where I'm going with that. In order to get debarred by these regulatory bodies. I mean, if you do something wrong in terms of on the regulation side, you just get a slap on the wrist, and you're still okay. But yet you're still okay, and you're still on the SEC. And along comes some scammer saying, "See, my name's still on the SEC listing. I'm still a good boy, right?" So you got to be very careful of that. So that's why I stress, if they're not putting out a daily track record showing all of their position logs and what they're trading to verify each and every position, the price of that instrument at that time, they don't match, you're probably dealing with a BSer. And that's why I'm doing what I do. I don't care if I lose or win in my trades. At least I can verify that what they are is what they are. You know what I mean?
Right.
And that's
no, I mean, I paid for one of those services, but the guy was out of Canada, Toronto, Spartan Trading.
I think I've heard the name, yeah.
He was really good. It's just that I just couldn't get it to work for me. And I was looking, this last week I was on Melnick's, Mark Melnick, T3 Live.
Yeah,
I was looking at their stuff too. Because I need to learn how to trade, and that's my Achilles heel right now. I don't know what it is I'm doing.
Now, how does it work? Like you say you don't have the trading experience, but you're still a coder. But like, what do you think the gap is in what you're doing? They just show you stuff, and you're trying to implement it, and what you implement doesn't work out as what you would expect.
At Spartan, basically, he shows you how to find securities. He shows you how to put the pivot points, how to draw trend lines. He's big on the 4, the 8, and the 13, the EMA, and the 200 SMA.
Yep.
And so he shows you how these all work together. And also he has a list and said that this is, he basically said this is the hardest job you ever had. He's a straight shooter, which I liked about him. And he said, look, 90% of the people will lose their money trading, and this is why we came up with this 1 to 3. For every $1 you make 3. So you basically have your he's got a spreadsheet where you say, I want to make $50. I want to risk $50 to make $150. Right. And then he's got a spreadsheet where it says if the stock is say $1, you basically buy 2,000 shares or something like that, and then you set it up where this is where you put your stop loss, and if everything works out fine, you buy in, and then the stock keeps moving up, and basically the trend is still intact, you go full side. Right. And then when it's that certain point, this is when you cash in or take a little bit off. So it's a whole process to it, but is it with a specific broker? No, he doesn't. I use Thinker Swinsets, TD Ameritrade, but he's got something where if you can use E-Trade, and I know he uses the 2000 TC2000 for, I guess, drawing graphs, and he trades. I mean, he's literally there, and he shows his P&L. Not only does he show his wins, but he also shows his losses. He really is a stand-up guy. He was with AC Absolute Trading or something. He was there, or and then quit and started his own. And
So,
I mean, I literally see people in the room and they're making money.
right.
I just never did because maybe I wasn't fast enough. Maybe,
But
I
is he
tried to trade his stuff.
is he using a trading platform and he sets up some kind of automation for these trading setups?
No. Basically, he just kind of watches it and he'll just say, these are the stocks that I'm watching because there's going to be news on it. That's the catalyst. I mean, I learned that from Ross Cameron's class, too.
Yeah.
I didn't pay for it. I just took it. And Ross Cameron's looks for these low float runners.
Right.
See, these are things that I never knew about. I mean, and I've learned, I mean, I didn't even know how to use the Thinkorswim platform. It took me like about 2 weeks just to figure that all out. I mean, so I was efficient at it.
Right.
It's the learning curve is just insane. I mean, literally, I'm trying to learn how to trade. I was thinking if in 6 months I'd be able to trade and I can just trade for a living. And
that's my Python course because it's structured in a way with all the components needed for a basic trading bot, as people call them now.
Right.
And
but the problem is like even with the like you mentioned the Polish guy. Oh God, what's his name? He had a
Sykes?
Something ski. I bought the book, Trend Lines. His site doesn't look very pretty. He's a Polish guy that does all the that shows you the different trend lines and candles and how to read those and apply them.
Yeah.
So let me see if I can find it. I'll have to find it. So, but I need to figure out. It's like, well, you have to figure out an algorithm that.
Well, that's the thing. It's like that's why I have the Python course because it gives you at least the basics to give you, the database piece. There's a technical analysis piece, and then there's a data feed piece, and then the execution piece. Once you can fit that and build it, then you've got equivalent of a little guy sitting there at a river, putting his fishing rod in, called a bot or a trading strategy. Mm-hmm. And when something bites because the conditions go your way, then that's when you can start profiting, right?
Right.
And that's how I approach it because to do it manually, it's frustrating. To do it watching charts and then trying to figure out where the setups are going to be, you're literally scanning the market to be able to find the setups, and that's very, very difficult. And you could sit in front of a screen for days and not get a setup. But at least with the automation, as I said, think about putting a fishing rod into a river. When it bites, it may take a week or 5 days or a day. And once it bites, that's when you have your trading opportunities, right?
Right. But no, I mean, I understand it. And I have the code. I mean, I have it working with what's that thing called, the Redis, and every hour it would run, and I set up
and you have the flexibility to set that up to run every couple of seconds or every minute.
That's the site, Bulkowski. I bought a book from him. But the problem was when I downloaded the bid and ask, it seems that for that 1 minute, and this is where you're doing the differences, I kind of got lost in, because I didn't get it for, I guess maybe that was for that 1 minute, because it kind of sorts them.
Well,
like top to bottom.
What I'm noticing about the bid and ask is, it's just one method to be able to generate a signal from. It's not like you use one exclusive indicator, right?
Right.
You have to use multiple indicators that eventually line up. And when they do line up in one instance, then most likely you will have. I won't say.
Well, that's which one. And that's the point. That's $1 million question. It's like use the Bollinger Band, use the EMA.
No, I wouldn't use any of those because they have lag, right? When they have lag under your nose, that opportunity comes and goes. I've seen it more and more. I will tell you, if you want, the very simple ones are based on pure math, and they're really not technical analysis. You use rate of change percent, okay? ROCP, rate of change percent is 1. Because and what you want to look for if you're going to use a TA-lib in the Python package TA-lib, what I do is I look for anything that has whipsaws, and if I see a ROCP that's negative, I just don't take the trade because I know that it's not a solid trade. You know what I mean? It's not a solid high momentum trade, which means if it has, let's say, you look at 4 bars of an hour, and out of those 4 bars, 1 bar is negative, chances are it's going to go negative on you when you take the position. So I try to eliminate those kind of trading opportunities. And that's with the ROCP. And then there would be like the bid and ask, because the bid and ask will show you, not always, but can show you that if you have more bids and asks, chances are you got more demand than supply.
When you say more, you're not talking about more as in, like say, 10 bids and 4 asks. You're talking about the percentage difference?
It can be. It depends on what asset class. So, for instance, in the world of Oanda, here, let me show you. I think I've shown you this before. I just want to make sure we get this. Okay. So if I look up Oanda, okay, so I look up order book. Let's see. It should be.
Because it was a pair between bid and ask when I downloaded the file, so there were 10 and 10.
Yeah. Well,
so
it depends, okay? Because Oanda provides a certain amount of percentage. So let's say you do a poll on a particular position, right? Or sorry, a particular pair, Euro USD, okay? So what it does, it will give you an aggregate of how many longs and how many shorts you have on that pair at that time. And there's a way through the API, can't be done in MetaTrader, only through the API and REST, where you can total up the number of longs versus shorts, and it gives you a percentage. And I'll say 66% are long, 33% are short. So you know, chances are if you have more asks at 66% ask or longing, that means obviously the price is being driven up at that point.
So, but are you talking, say you have 10 asks and 6 bids?
Yeah, that's another way of looking at it. I think that's in the world of crypto. So if you look at crypto,
so it's not a one to, so the bid and ask isn't a 1-to-1. It could be a 1 to any, right?
No, it's a total number of quotes for that particular instrument. Let's say you use Bitcoin against US dollar and Kraken, okay? So you use Bitcoin against US dollar, you'll get, let's say, 25 total trades, positions put on at that time when you look at it. So maybe 16 of those positions at that time are longs, and then the remainder of 7 out of the 25 are shorts.
Okay.
You see what I'm saying? So you can calculate your percentage. Because if you have 18 out of 25 positions that are long, as opposed to 7 out of 25 positions that are short, chances are you know what direction it's going on and what people are doing. If they're more longing or more shorting, not just that, but you can get a measurement out of it. You can quantify it.
I see. That makes sense.
Because
that's what Spartan said. He says that when you see those bids start stacking up, that means it's going up. It's going to go higher.
Yeah, but that does not guarantee it's gonna continue to go up, because what will happen is if you were able to get in early when that price is driven up, yeah, you'll make cash. But if you're getting into the trade when it's at the tail end of it and it starts to taper off, but yet you still have a position on, chances are it's going to go against you and you'll have a losing position. So the timing's critical as well.
Right.
The unfortunate problem with that is, when you physically cannot sit there and tell me through an API or whatever that you can time and be able to time the bid and ask. It's impossible.
Okay.
But what you can look for at the same time is look for the whipsaws. Because if you let's say you have a position that's running up over an hour, over 4 hours, and you look at it, let's say with hourly data, okay, and you do 4 hours of an analysis on the rate of change, and you get back an array for every hour of the rate of change for every hour, okay? So if you have 4 hours where the rate of change is nothing but positive, then you know that you're somewhere in the more tail end of that trade, of that opportunity where the trade goes up. Okay? But
so when you're doing that whole, it's the same algo that you gave us in the class, right?
yes. Yes.
Okay, so that's all right.
But the only way you can control the timing of that bid and ask is to look for the whipsaws.
Okay.
Because
so, but once you get a position though,
yeah,
your position is live. You're basically every minute that goes by, you're scheduling that to run because you want to check to see where that security is located.
Right. And that's what I like about the Fibonacci levels, because when you look at, I wish I had a chart I could show you.
No, I got it. I remember 7 point something.
Yeah, because I could show you at a chart. Once you have a price action hitting level 500, that's great. But you want to make sure that it hits at least the level 618, because if it hits the 618, it's to confirm that there's going to be enough momentum, not just to drive up the trade at 618, but to continue up to the level 786.
Mm-hmm.
Because if you don't have a trade that is building a support level to be able to sustain the price action at least to the level 500, and you took a trade at level 500 or 618, but yet it doesn't show a solid support line for a couple of days or a couple of hours, chances are it's going to drop off when you take that trade. You see what I'm saying?
Could you hold for one second?
Sure.
I just got to stop like this for 1 second.
Yeah, do you want me I'm going to continue with the presentation, okay?
Okay, yeah, go ahead.
There'll be a playback. Continuing along. All right. So what we have here is talking about the Goldman Sachs. So, as I said, do not fall for these trading gurus at all. That just show you that they're listed on something like the SEC for reasons mentioned before. Now, the key here is when you look at banks, investment banks specifically, like Goldman Sachs, last time I checked was about a year ago, 1/3 of the staffing at Goldman Sachs are either technologists or computer engineers. So that tells you that majority of those people are moving into coders. So if you're learning from a human-based trader, what that trader is teaching you, and even the methodologies you use in that trading will become old content. It will be meaning that those traders that trade as humans are going by the way of the dodo, or will basically become obsolete, and they'll be no different than dinosaurs going extinct. Okay, so that's where we're at today. And as time passes, we are now moving into the future and even present day, and feeling the impact of machine learning and AI. Just last week there was a Newsweek AI event in London, and one of the better known traders out there said that more and more funds are not hiring researchers that do traditional quant using mathematical techniques. They're now moving to the instance of hiring services like Numerai, which is this company here. So if I showed you Numerai, yeah, I think it's Numerai AI, sorry. Yeah, so this is Numerai.ai or Quantopian. And what's happening is that these companies will go out and put a contest through these services and say, here's our data, here's what we're looking for, and they'll have a contest. And those that will find the patterns that can be verified and what these funds are looking for, they know they got good coders, good researchers coming out of that contest. Those are the guys that get hired for a particular project. but they're not permanently employed. These guys are known as bedroom quants. So that's the direction, that's the future we're going in. So if you're in a job trying to look for a high-end research job using traditional quant with your precious PhD, that ain't going to cut it anymore. You got to be involved in these contests to get looked at, to get the temporary projects. That's the future we see. That's the future we're going with. That's what's happening present day. And that's how I think the term quant will become in the future. And a lot of that's going to be driven by machine learning and driven by AI. And I firmly believe that. Because why would a company go out, like Goldman Sachs, hire all these researchers that 90% of the time are not performing and getting the profit that they seek from these high-paying positions? And a lot of companies now in the world of HFT, companies like Virtu, Jump, Domeyard, Two Sigma, where I have this link here. Let's see here. Where was it? Right here on WSO, Wall Street Oasis. So this guy talked about where we're at with these firms, including, as I said, Two Sigma, Citadel, Old Mission, I don't know, Hudson River Trading, DE Shaw, Five Ring Capital. So these are always these new companies that come out of the woodwork and explain this is the future of trading. So when it comes back to these guys that I talk about that are old school, old dinosaurs, and they got their name listed on regulatory boards like the SEC or whatnot, it's so what? It don't matter. Even if you worked at these firms, so what? It don't matter. What matters is that you're part of the contest. You can verify your trading performance and your research through these. And that's the future of quant and how you get measured as a trading, as a trader and a so-called guru. So that's the future that we're entering. So hopefully there's somebody out there. If not, it doesn't matter. Okay, cool. So now, so do you understand what I just talked about here? Because this is a big deal. I came out last week at this event put on by Newsweek. And it really blew my mind that we are at a point where I always thought, oh, these researchers are going to be highly sought after. They'll have a job for life. But that's not the case anymore for the reasons that I mentioned.
So there's a big shift in the quant world then.
Well, I'm doing my own research. If I showed you the stats, because I thought, oh, MetaTrader, MetaTrader 4 and all this would be one of the most sought after things that people want. So I put up a test sales page to see what the response was, and it was okay. But when I put up a sales page on Python or anything related around Python, I could say it was at least 5 times, maybe 10 times more responsive than anything that I've seen in MetaTrader. And that really blew my mind because I didn't think Python and algorithmic trading and Python would be in so much demand versus what I thought was traditional trading. And the other thing that I found was these so-called bedroom quants. There's a lot of them out there, and some of them are really good, some of them are pretty good, but it's the cream of the crop that get the contracts, I guess you could call them, from these newer HFT firms, and they get highly compensated, but they don't have a full-time job. And they may or may not have a math PhD. They may or may not have a computer science PhD. They may not even have any background in finance. This is the thing. You're able to be proven with nothing, with no education at all. If you got the drive and you got the chops, be it mathematical or technical, you can still have a chance to get noticed by these firms just by performing in these contests that they put out. And to me, it just levels the playing field. No matter where you come from or what your background is, it's the drive that gets you there. That's what I'm seeing, and that's what I think the future will be. And again, that is also built around the machine learning and the so-called data science term that they call it. So when it comes down to what I put out, two things. I have the Quant Labs net channel or Instagram, whatever. That I put up all my stuff there. It also gets linked into my Facebook group at Quant Labs Net. And I do that. I'd rather show me being honest and being verified that, yes, these are true trades. These are true everything. And it can be verified because I'm including the position log. And that is important. So here's the performance. Oh, and also you can get that here at this site here. Let me just pull that up.
Yeah, take a screenshot.
Oh, yeah, of course. I mean, I could put it in the chat if you want as well. You want me to do that? Yeah, I'm going to do that. So this I've been having for a year, and constantly I'm always finding. Thanks for the book too. Oh, the pattern side. Right. Yeah, that guy's good.
Yeah, he's really good. He knows what he's doing.
Oh yeah, Bukowski. Yeah, I like that guy. Anyways, yeah, this is the track record. So what I've got now is I've got the date when it's generated, and this is some of the testing. But usually it'll get generated at 23:55, so 5 minutes to midnight, and that will measure the performance of that previous day or the current day. And then I have crypto and the Forex. So you were talking about these different SMAs, correct? And one of the was it
EMAs and SMAs.
Right. Okay. So last week I was online poking around, and it said it was on Investopedia, and it was called the perfect day trading combination. And what it was just three simple moving averages of 5, 8, and 13. So I wrote that bot up in less than, I think, an hour and a half.
Right.
And that was using the Python course that you know about.
Right.
Because once you that's also important with the Python, with all the critical skills you get out of that, and once you stick to a very simple pandas type of framework, you're able to write bots very quickly. So I was able to write this new one within an hour and a half. It included the charting, it included the data down, everything, and it was done in an hour and a half. So I wrote that. I ran it for a couple of days, and it looked okay. And I'm going to actually put that on my other server and test around with on Forex, maybe put it into crypto. It is momentum based, and what it is just basically, let me see if I could find the article. And if you're paying, from what you're telling me, I don't know what you paid on some of these courses, but you know, here it is, the perfect SMA for day trading. I think it was this one. I could put this in the, but it's a simple Google search result. Yeah, here. Okay, there's the dashboard for the track record. So yeah, so this is called the perfect moving average for day trading. Now you could set this up on a trading platform. As I said, with my stuff, I was able to develop it in less than an hour and a half. But what you're doing is you're taking an SMA of 58813. It seems to work. I actually put out a video on it using Motive Wave. And it looked pretty good because what you're doing in what I came out of it, we have this 5, 8, and 13 move, right? So we always want to make sure it's in this order, 5, 8, 13. So it's the different colors. We've got blue, green, red for the 5, 8, and 13. So what you're doing is once you have this bar moving up of 5, 8, and 13, you know you have a trading opportunity if you're just sticking to long. And it's a reverse order if you're shorting. But the entry you want is when right in here, when the 5 crosses the 8, and then all of a sudden it's in this order, 5, 8, 13, okay? So I can set up that in my Python in no time. That's your entry. Once you get up to here, you'll get your 5, and once the 8 crosses over the 5, that's your exit. So I tested that. It looks promising, but again, it comes back to the same thing with the results I'm showing you here. Now these are the results just in the last 12 days. So let me just pull up these reports here. So if I pull up this one, this is from last week, crypto for September 17th and 18th, right?
Mhm.
So the format I use is very simple. So I have my real profit loss for 17 and 18 of September. So this is the sum that trade or that trading day would have made. Again, no leverage, no margin. $13. There's a reason why it's $13, because when you're trading something like Bitcoin, because it's so big, that can skew your trades and your positions. If they're positive, you'll get big profit, $13. If you get a loss, which I'll show you another one, you get a loss, and that's a big loss because of these Bitcoin trades. So what you kind of want to look for is the rate of change percent-wise on all those positions. So it's essentially saying for every position I put on for that day, I got back 0.07. Now, what you want to look for is to say, with confidence, I'm going to get 1% for the day, let's say. Like, that's what we're shooting for. So if I know I can get, no matter what I trade, using this algo, this bot, or whatever you want to call it, and I know I can get 1%, therefore I can scale up my margin and leverage, because I'll know consistently I'll get that. So in this case, that you'll go, well, that's a lot of positions. Those positions are high because I'm testing the thing, and I'm pounding my my algo and just give me as many as I can get for the day. So when I do that, I got 56% win ratio. So this is the key number. So for these 2 days, I got 56%. And people will say, well, that's not high enough. And I'll dare any person out there, I'll dare them. You show me your algorithm that you can put out for this period of time, even if it's for 2 days, a week, and get over 50%, I'll be impressed. Until then, I've not seen anybody be able to show that at all, because it's very hard to do. The other thing is, I'm finding Forex is even harder. So I'm thinking, do I shoot for like 5 pips a day and be happy with it? And somebody will say, well, that's not enough. And I'm like, well, first, let's remember there's no leverage that I'm doing this calculation on. And even if I get for the week 43 pips, so in this case, let me just show you this one. This is for the week between the 12th and the 18th. So this is another track record I showed for last week. So in this case, what we have here is rate of change at 1.13. Again, no leverage, this is Forex. 174 wins out of 341, which is a lot, again, number of trades, because I'm pounding it to test it. And then we pulled off a 51% ratio with a sum of 43, which is essentially 43 pips for this time period, which may not seem a lot, but if you were to put on, if you're consistently getting this weekly performance over a week, okay, 51% win ratio with 40, let's say 40 pips a day, a week, that's roughly 8 pips a day. What's that?
Can you define pip again?
Oh, a pip. Yeah, if there's 3 decimal places
So
here.
what does it stand for?
Oh, pip? I don't know, but I just know the pip is just your representation of up to 3, or sorry, 4.
Oh,
That's
okay,
one pip, right?
Okay, I got you.
Okay. So if you're getting 43 pips a day with no leverage, I would think that's pretty good. But if you consistently can do it and prove it, then yeah, lever it up and put your leverage at 5, 10, 20, whatever you can afford to risk. And then you're multiplying that by whatever your leverage is, but it has to be consistent. And that's what leads me back to what I talked about with all this theory about the bid and ask and all that stuff. That's not consistent. That's not going to prove that you're going to get consistent profit, because it could be based upon timing of your position. It could also be dependent upon what's happening in the markets at that point. Is there enough momentum to drive up the price all the time? So there's a number of factors that we have no control over, and there's no way we have control. But there are other techniques you can use to minimize the risk when you put on those trades. And one of the ones is to look for negative rate of change percent moves at whatever time you're looking at. You understand?
Yes.
So that's really important that people understand that. So here, this is last night. So for Forex, guess what? I've got a rate of change at 1.3, which is pretty good. Now all the number of trades that I'm putting out for a day are settling down, which is now 26 positions for the day because it's stable. I've got it kind of working, kind of. So I got 13 wins, and it puts me at 50%, but I'm still profitable here. So that's pretty good. But is that because the markets were working in my favor with some kind of event where I was able to get this trading result for that 24-hour period? On the other hand, here's another problem. This is crypto, same time period. Here I'm taking a loss, or basically it's a losing day. 45% win ratio, 10 out of 22 positions. That's still pretty good in a way, because it's not like blood in the streets, but it's still a loss. But here the rate of change is slightly negative. So I would expect to see these type of days on this asset class of crypto. I'll expect losses. It's impossible to get 100% win ratio every day. It's impossible. Statistically, it's impossible. But you'd be pretty happy if you get above 50% from what I'm seeing, especially in this market regime. And the thing is, as I said earlier, this is heavily skewed because of Bitcoin. So I could have a winning day. But all of a sudden, if Bitcoin comes along, put on a trade that goes against me, and I lose $11 on that trade, it totally takes out all my positions, no matter if they're all profitable. But one bad Bitcoin trade could knock everything out. And this is the problem with crypto. But I can fix that by adjusting my position sizing. But the key factors here, so if I go into that download section I gave you, right here. So if I download one of these, so let's say I'll download the Forex. What you want to look for over the long run is the positive trending equity curve, because I include that. So let me show you that. So here, now remember, I've only been tracking it for about a week, so it's not much anything on it. But here, this is the equity curve for the Forex. So what you want to see is this, just a steady trend up. As long as that trend is up, it's good to go. But then if I showed you the crypto with that losing day, just the one trade, this is what can happen. Let me go back here to that trade, or to my dashboard, and then download the crypto. This crypto one for last night on the 22nd of September had a losing trade, but look what happens.
That's down. It looks like you downloaded Forex again.
Oh, I'm sorry. Yeah, sorry. Yeah, crypto right here for the 22nd, yeah. So I download that guy. It says 58. Come on. So if I load that up, so again, if I showed you the equity curve, you go, oh my God, that's no good. I'm not here to make excuses, but I'm going to show you the nature of cryptocurrency, especially now that it's kind of trading in a sideways market. Look at what happens. It looks all cool, right? From this day up until yesterday, a little bit of a trade. It was doing well. Along comes that bad Bitcoin trade, and it knocks the whole thing out. That's the danger of Bitcoin, because it's so big, and it totally skews the trade. The other thing is the overall, that term sheet thing I mentioned.
So you're watching it every minute. Once it starts that downward trend, you dump it, right?
Yeah, obviously you don't want that, but here at least you can see how it's performing each day. You know what I mean?
Mm-hmm.
So right here you get to see what the win ratio and the rate of change for the day, and then it'll calculate all that fun stuff that you'd find in a typical professional level term sheet. Give you the year to date, sharp, all the statistical, the descriptive stats, drawdowns, and then as it builds, each period you'll get an annualized or a monthly return for the month, and then eventually for the year as well. So it'll do that. So obviously this is not too good, but that's the sort of thing that I'm looking for. And then every day, as I said, I include the position log as well, which is, let me just pull up Excel here. Come on. Yeah, I was not happy to move into Office, but when I started seeing the malware and LibreOffice, that really scared me. And that's on a Mac too. This is the problem of open source. Okay, so I don't know if you've seen this. So again, we have, how many positions we got? Like 80, how many we got? 23. So this is what was traded yesterday. Okay, so here's the P&L for those positions. Here's the entry. This is the exit price. So obviously you want the current price to be higher than the entry for profit for the P&L. This is the quantity that's traded and the ROCP on the overall position. This needs to be fixed, and this needs to be fixed as well, because I'm also calculating, looking for trends, and trying to capture on each position what was the bid and ask at that point, so I can kind of tweak the strategy or bot or algo as time passes, so I can minimize the losses. So that's what I'm doing with the bid and ask stuff here once I get that stuff working as well. Make sense?
Yeah, it does.
So the cool thing about here is
that $12 loss, that's the highest.
$4 P&L right here.
Implying 15.
15 right here.
Yeah.
Yeah, that's the culprit right there. Let's say if I took that out. Okay, so let's say if I took that out.
Well, what happened there?
Well, it's one of those random situations that you do not have control over, and even though I took on a position and there's probably fewer whipsaws, you still would. It goes against you because I might have caught that trend in the tail end of it, and when I took the position on, a whipsaw came along and knocked it out. And you can see here for the day, I take out that trade, I've got a positive P&L now, as I said earlier. That's the problem of big coins like Bitcoin. It can easily knock out a profitable day. Now, I could do the reverse and still trade Bitcoin and have another trade that gives me $90, which I had a few days ago. And that will set you for the week. You know what I mean? So the point is, no matter what you learn, what you take away from this, it's random. It is always, I don't care what people say, it's a random walk. It exists. It exists in the market. There's no such thing about timing. There's nothing you can do about it. I hate to say that. You'll get whipsaws randomly coming and going in the market, no matter what you trade, no matter what goes on news-wise. It's very difficult to control that. The only way you can control that is when you take on a trade, take on a position, that you try to take on a position that has the fewest number of negative whipsaws that go against you. Because it just randomly, I'm doing okay, one bad trade knocks the whole P&L out. But yet for the day, yesterday, and it was a tough day yesterday, you can look at the news on crypto, it was pretty tough. And without that one trade out of 23 trades, one trade took the whole thing down and blew off that equity curve and all sorts of things. And this is what I'm trying to suss out to say, how can I minimize that? I can't control whipsaws that go against me. I have no control over that. I can try to control better timing, maybe. But considering I'm like, wow, this was a profitable day if I didn't include this one position, right? But because of that, out of 23 trades, that batch was, out of that batch, net-wise, it was positive. But again, it's this one bad trade that goes against me. And you could do the flip side of it and say, hey, I could have a really good trade that will catapult my P&L or my equity curve to the moon. But those are hard to time. They're hard to predict.
When you have the date when you purchased it, you have the date, the timestamp when you purchased it.
Yes, right here.
Right, but you don't have the timestamp when you sold it, right?
No, this I believe is the time that it is bought. But
it's kind of interesting to take a look at it when you dumped it to see if your algorithm was picking it up when you sold it.
You know, I could easily do that and put a timestamp for both the entry and the exit. And thinking about it, I should track that as well. So it's like talking to guys like you. This is where I'm like, yeah, that totally makes sense.
Right. So
I'm going to do that.
What happened?
Yeah. I'm going to be honest with you. I don't think it really matters if the trade was put on for half an hour or a day, because everything's random. It's just, I can't explain it. It's just the way it is. But I'll try to figure out that. I can easily do that through my watch list and position log. Like I do have that on my server. But if I had to do this so other people can measure that, and then also measure the bid and ask right here, once I get that working, and put that as part of my overall track record, because that you can get trends out of that. But again, it doesn't really matter, I don't think, because a whipsaw is a whipsaw, and it's going to come around no matter what. Nobody has control over those.
Right.
And I don't care what an educator says. Because when you look at, as I said, all these other indicators out there in terms of Bollinger or RSI is useful. Okay, I can't deny there is a factor of positive volume with RSI. No doubt on that. That's another one that I use. Okay, so I really use the three that you were asking about: the ROCP, the rate of change percentage, trying to measure, and I do that for whipsaws. I also have RSI. Somewhat, because I've seen it where if let's say the RSI is not at 70, the reverse holds true. I can't remember how it worked, but if there's enough volume and what you think, you don't take the trade, but you should, because the volume is there with the RSI. I also have what else did I mention? The Fibonacci levels are really important too, because that will help you measure the level of momentum and a true support and resistance. And if there's enough support at a certain level in the Fibonacci of at least the 618, then you know it's pretty solid, and that momentum will continue to drive up. And the time frames matter as well. I don't think it's very tough to trade on anything less than 5 minutes, let alone maybe 15 minutes. The only time I trade on when it's less than 5 minutes is when I have an open position, because I want to get out of a position if suddenly the bottom falls out and that position goes against me. So I do watch positions. That's why I segregate the watch list to the position manager. With the position manager, I'm always checking on pretty well every minute or 2 minutes. But when it comes to the entries, I only watch either 15-minute or hour. Nothing more. Nothing more or less. Does that help you out?
Yes.
Okay. But other than that, I mean, I'll definitely put in an exit timestamp if you want for the exit. I think that's good. And then the other thing I can put in is the time of when the bid and ask is, because that's useful for people. But for anybody who watches this, I keep saying this over and over again. You cannot, from what I understand, and I've verified it, you cannot get the order book info from the broker in MetaTrader. I don't think you can unless they have some kind of indicator they provide. But depends on the broker. I don't think Oanda does, and they don't seem to promote it, but that's critical information. That's pretty well it. Do you want me to talk about? I can go on in the other presentation here about the MetaTrader. So one of the big areas outside of what you mentioned that I got to fix is the position sizing. As I demonstrated, you can get Bitcoin can easily skew an entire trading day, as I showed you. Even though it's a profitable day, that one very big but bad Bitcoin trade can wipe out that loss and pretty well make the equity curve look bad too. So I got to fix that. You got any other questions, Al?
No, I'm pretty much good.
Oh, HFT PCs arrived. How you doing?
Okay.
Just to let you know, I'll have a playback for you. Okay, I'm not going to go into this too much detail, but I just want to highlight this. I might be able to actually demonstrate this next time live on my Windows environment. So I've been working pretty hard to get the MetaTrader working with the Expert Advisor. If you want to know the progress, the best place to go is the watch list. I have a MetaTrader watch list. So if you want to know how to do that, all you got to do, go to youtube.com/quantlabs. In there, all you got to do is go look for playlist right here. And then in there, you'll find somewhere the MetaTrader.
Hi everybody, Brian here from quantlabs.net. Today we're going to talk.
Yeah, but just go in the playlist there. In that section, you'll find a MetaTrader. And that's where I put all my latest info on the MetaTrader stuff. So this EA was custom built by a really cool dude who knew his stuff. That's part of the quant analytics service I think you guys have access to. The key is I've got live entry signals working. I think I've talked about them enough. So what I'm doing, and I've got it stable now, is where it will receive the entry signal using Outlook with this add-in. I've explained it in one of the videos. And what it will do is it will process the file into a text file, and then it will trigger an order within the MetaTrader Expert Advisor, and with the Expert Advisor will then handle, once the order is triggered and processed to the broker, that EA will then take care of the exit for you automatically. You don't have to do anything. And it's just all it's using is just classic the Fibonacci levels that I've mentioned before, where the entry's always at 618 level. The first leg of profit is at 786. If the price does continue to get driven up to level 1, it will then exit. And if there's a stop loss, it will take the stop loss at the entry price. That's all automated within the EA. So you can set that up in any MetaTrader platform you want for any broker, but again, I'm using Oanda, so that's who I'd suggest you want for the orders to match it up with the order signal. And usually, I've tested it enough where once the order comes in off of the server, what'll happen is in your inbox you should get that entry signal or exit or any signal within 15 seconds. So it's as quick as you can get it. Unless you live on the other side of the world, like China or something. You may get a delay. But usually you can get it pretty quick. So if you're using like Gmail or something, you will get a delay because it goes through its security checks and whatnot. But if you can get a dedicated email on your own service or your own domain, the check, and there's no security checks, you'll get that signal really fast. And that's the best I can do. I was going to deliver it through SMS, and I looked in the pricing. It was very, very expensive, so email was my only option. And I could put a presentation on this next week if you want.
Yes.
Just let me know.
Yes.
Yeah, I kind of figured. You know why I wrote this? Because I get guys that want to work hard. They're either programmers or other traders. They don't have the technical skills, let's say. And they go, it's great to get emails, trading signals. And they go, well, what happens if I'm sleeping? What happens if I'm on holiday? Well, guess what? If you're going to do Forex, you can easily set up your MetaTrader and have it running on your own system. Feeding in the orders when it comes into the signals. So that's why it was built. And you can do the same thing with the crypto. Obviously, that's got to be in Python, but that's another story. But you're going to use CCXT for that, and that can work really good too. So I'm working in that direction as well. I kind of got on my GitHub. I think I've shown that the GitHub project. That let's see here, GitHub Quant Labs. I think it's this one. I think the project's called Algo Trading Signal with email, and I got various files on that, how to set up an email, all kinds of little utilities, and they're receiving emails for the signal of crypto and forex is one, or crypto only, and how to process a market order and all that. So I've got all kinds of examples in that. And you can set up your own bot to do that 24/7 and it never shuts down. But as I've shown in my P&L, if it's growing every day and that equity curve is positive and trending positive, you got yourself a little machine that's going to get you some profit every day and never shuts down. So I'm pretty well done. Thanks for watching. Do you guys got any questions so far, or I can repeat any of the content I went through? Anybody?
I'm good.
You're all good, Al? How about you, HFT, PC, or TN? Ho? Thanks for watching.
I'm still watching.
Yeah. What's it? Do you have any questions or anything? Comments?
Well, you answered it. You said you're going to give a presentation on this.
Okay. Yeah. Well, I'll do that next week. So what I'll do is I'll kind of walk you through the setup on the software with Outlook. I'll show you. I've already got a video on it in detail with the add-in that you need, and then there's a Python script that you can get from this GitHub. And I'm going to actually do a code review of the latest one because there was some, I'll call it butchering, which it was, to get it working. And then do a code walkthrough of that and a demo of the MetaTrader. Hopefully you can get some live signals come in. If not, I have a script that will send over mock signals and watch the EA, see if it works. The EA is really cool. I got a demo of it on the YouTube channel in that MetaTrader playlist, and it will show you all the charting of the entry, the different colors on the entry and exit of that trade, because it seems to work pretty good. I've seen some profit and stuff, but like I was showing Al earlier, the number of positions last week on my trades were like a couple of hundred for the day, and that was because I was pounding it, testing the deliverability of the emails, how it handled all the orders. And as of probably Friday, everything's settled down. So it's going to be between 20 to 30 positions a day. And then hopefully it will produce a profitable P&L for the day and a profitable P&L for the week as well. And that's, with hopefully minimal programming. You guys got any other questions at all? Comments? Cool. Thanks, man. Any other questions or comments? Like I said, I've got this recording, so I'll post this webinar on my YouTube channel and my social media. Can't ask questions after this. Oh, yeah, of course you can ask at the meeting, because I know you got some proprietary stuff. Yeah, we'll definitely do that. I'll email you a new Zoom link, and we'll do it all just afterwards. Okay. Anybody else got any questions at all?
You said you were going to stop the video and then I could ask you a couple of questions.
Oh, sure. Yeah. Well, why don't we do that now? I'm gonna. Are you guys okay to as a group of 4 to talk about any of your questions? I'll stop the recording and it won't get republished. Are you okay with that? We'll do that right now.
Oh, sorry.
Yeah. Sorry, I didn't get that. Was that a yeah or no? Was that okay, or do you want to do it privately?
I just had different questions about what we talked about earlier.
Okay.
About the different learning not algo, but learning trading.
Okay.
And you said you wanted to stop it to talk about it.
Well, you tell me if you want me to stop the recording. If you want to.
Yeah, go ahead and stop it.
Okay. Yeah, I'll do that right now. Okay, it's stopped.